Hey guys, it's Tom with Symbol Surfing. Welcome to the channel. And today I have a video for you about Ringcentral. The ticker symbol is RNG. I believe there's a 50% upside on this stock. So to basically tell you why I feel that way, I'm going to talk about four things. They recently hit an all-time high on February 12th, 2021. They had an earnings date 4 days later, and then there's been a huge sell-off. And I believe that this sell-off has been an overreaction. It's completely overdone based on the earnings report. And I'm going to go into detail on that. And then the fourth thing I'd like to do is go to TipRanks and search up RNG. So disclaimer, I am not a financial advisor and this YouTube channel does not contain any kind of financial advice. Okay, so for the all-time high, let's check that out. So we're just going to start here at the 6-month chart. And what I want to show you guys is this right here. This is the all-time high right here. And it was at 446 a share. So we can look at it at several different time frames. So the 1-year chart, you can see this is the highest price it's been at in the past year. This is very bullish. And then we can look at a 5-year chart. You can see that this is the highest price it's been in the past year. And then this is where it gets kind of interesting. You can see that, this company has just been constantly hitting new highs, new high after new high. And there have been sell-offs, but the company has been hitting new high after new high. And I've been actually using this company for one of my businesses, and I've been very happy with the service and the support. And it's great to see that this company has been doing so well. So on the 1-year chart, let's again point out that all-time high. And I just want to really highlight that when you have a stock like this and it's hitting new all-time high after new all-time high, it's a great stock to watch and to continue to monitor. There's going to be sell-offs, but if the trend is intact, these sell-offs could be just great buying opportunities. So that covers the all-time high. Now, 4 days later, on February 16th, we had the earnings date. So let's check that out on the chart. So these white vertical lines, okay, are the earnings dates. And what's really cool about on Symbol Surfing is we show the earnings date. We don't have a lot of earnings report data, but I believe that just knowing when the earnings date is on the chart, there's tons of data that you can extrapolate, if you will, from knowing when the earnings date was and look at the price before and after. So right here at this earnings date, the price was right about, I want to say 275, and it was right at the 50-day moving average. The price, rallied up to this all-time high, and then coming into this earnings, the price sold off a little bit, and obviously the price fell quite a bit, and we're going to talk about that next. But I just wanted to highlight this earnings date was just a couple days after this all-time high. We're going to come back to that in a moment. So I want to cover that earnings date. Okay, next we're going to talk about this post-earnings sell-off, which I think is completely overdone. So basically what happened is after the all-time high, there was the earnings date. The price immediately, or almost immediately, fell to the 50-day moving average, and it didn't really stop. It went through the 50-day moving average. So short term, that's pretty bearish, but given the fact that it's been on such an amazing run, I mean, from here it went from 275 to almost 450 in just a few weeks. That's pretty amazing. So it's normal there's going to be profit taking. What happened then is the price rallied back up to try to touch the 50-day moving average again, but the price dropped considerably all the way down to the 200-day moving average. So now we're kind of going, hey, this earnings report wasn't that bad. Why is this happening? And I'm going to talk about the earnings report in a moment, so just hang with me. But the price went through the 50-day, went and touched the 200-day. It bounced off the 200-day and then came back down and then bounced off of it again, but then ultimately dropped down through the 200-day moving average. So this is like bearish now. We're getting the bearish mode here. Went through the 50-day, the 200-day. It's trying to stay above it, but it's failing. And then most recently, it bounced off of this price, which I'm going to just draw another line in a moment that will kind of hopefully make this even more clear. But this post-earnings sell-off was really, really a lot. So You know, I'm going to draw the line right now just so we can, I just want to highlight how much of a sell-off this was. So remember this earnings date around 275? Well, the price rallied up to the all-time high, and then within about half the time it took to get to this high, it sold off pretty much down to where it was before this whole run. So it kind of begs the question, what was in this earnings report that was so bad, right? So that's the post-earnings sell-off. So let's look at the actual earnings report though. So for that, I want to go over to Yahoo Finance. I have this article pulled up. I'll put a link in the description. It's Yahoo Finance by Zacks Equity Research. And by the way, guys, if you like this video, please click the thumbs up. I really appreciate it. So why is Ringcentral down 22% since the last earnings report? That's a great question, right? So here we have, just want to highlight a few things. So it says Ringcentral Q4 earnings tops estimates, revenues up year over year. So that's a great sign. As we look down further here, I'm going to highlight this paragraph. Ringcentral reported fourth quarter 2020 non-GAAP earnings 29 cents per share, which surpassed Zacks' consensus estimate of 7.4%. The figure increased 31.8% on a year-over-year basis. That's fantastic. Let's look at the next thing. Net revenues of $334.5 million also beat the consensus mark by 5.5% and jumped 32.3% from the year-ago quarter. The results reflect solid demand for Ringcentral's cloud communication solutions. So basically what I'm highlighting here is what was essentially said so succinctly up here. They topped the estimates, and the revenues are, and the earnings results are better than year over year. So that's really great. And I read through the rest of this. I didn't see anything negative or horribly negative even. So that's what I read there. Again, I thought that was really relevant to this whole story. So we talked about this post-earnings sell-off. I think it's really overdone, especially given their earnings report, because that was the only thing that came out. And it just so happens that's when the price started to drop so much. So basically where the price is right now, it's a little bit higher than this. I think, so it closed at 305 and a penny today, but we're still way down below these highs. So just, watching this stock over the years and seeing how it just constantly rallies back after sell-offs like this, at 305, I think that this stock easily could go back to where it was at, hitting 450, which would be a 50% return. But I wouldn't be surprised if this stock goes even higher, up to 500, and continues its awesome run. So that takes care of the post-earnings sell-off and analysis. I kind of went into where I think it's going to go, but let's also look at what other people are saying on TipRanks, for example. So pulled up TipRanks. They have it as a strong buy. There's 22 analyst ratings. There's 22 buys, 0 hold, 0 sell. And the price targets are $410, $481, and $535. And I'll put a link to this page in the description as well. So that's basically it, guys. If you like this video, please click the thumbs up. I'd love to hear your thoughts in the comments. Click subscribe for more straightforward chart analysis like this, and ring the bell so you get access to our latest videos. Thanks for watching.